Hello, everybody. Good afternoon, good morning, good evening, whenever you decide you want to watch this. I am back here for the week of 9/15, which is crazy to say. This year's flying by with another weekly market update. And really what I want to focus on right now is something that's not happening within the US. Markets are doing relatively fine with a bunch of uncertain data in the US. The S&P hit an all-time high right now. Individual stocks are doing well across the board. Really, what I want to talk about right now is the intersection of political uncertainty and global debt markets. So, I've talked a lot. If you watch these videos from time to time on debt and my worry about debt and inflation. And while U.S. markets, debt markets have actually started to come down in interest rates, what's happening on a global scale right now is quite interesting for me, and that's where I have my attention on. And more importantly, that's where LPL's market update had its market on right now. So, in a nutshell, global bond markets have sold off recently due to uncertainty surrounding key political changes, most notably in France and Japan. Japan's prime minister, I'm not even going to try to say his name, but he resigned last week, was as to a potential shift in fiscal policy to concerns about slowing monetary policy normalization. And additionally, France's prime minister stepped down recently after losing a confidence vote after trying to pass a budget with an austerity measure. He went out on public and said, "Guys, we have a big debt problem here. We're going to have to cut." And he got thrown out for that. Add concerns about ongoing fiscal sustainability issues in the UK and the debt and deficit concerns in the US, and it makes sense that long maturity bond yields globally have risen. France and the UK remain important buyers of US treasuries, so as long as their home market yields increase, US rates actually start looking less attractive, which puts upward pressure on US yields. This is one big feedback loop of what's going on in debt markets. So the biggest thing I want to show you right now is this key chart from this weekly market update from LPL. And I never post these on here, but if you ever want to receive these, one is a client of point 32, but if anybody else, please let me know. So what this is what's called debt to GDP. So how much debt do you have in relationship to what you produce as a nation? And right now, Japan has been in the lead at 240% of debt to GDP. But USA is also incredibly high at 122%. And as you can see here, most countries are now over 100%. It's super important to note that the only out of tracking this measure across history, only one country has survived having a sustained debt to GDP over 120%, and that is Japan, which is really an ongoing and fluid situation. If you guys can remember last August, it feels like an eternity ago with everything that happens in the news. Japan's bond market imploding caused a global market sell-off one morning in August last year, where yields spiked in Japan that ended up crashing markets. Names like Nvidia, individual stocks were down 40% at the market open that one August morning. It was quite stressful. But here we are. And this has goes into my broader theme that I've been reporting on or discussing on these weekly market updates. Even back at Edward Jones to today now as an independent advisor with LPL. The debt problem, the growing debt problem, and the yields and the ability to service this debt, not just in America but across the board, have been increasing and have been steadily growing in the backgrounds for my whole life, and even truthfully beyond that. But since 2008 specifically, really on steroids since 2020. And there are three options to deal with these growing debt problems that government. The first is austerity. We tried that here in the USA this year, and France just tried that, and at least a political instability and a pivot. So that's out the window. The second option is to grow your way out of it, which is what the United States is preaching right now and what other countries are going to try to do. But while I'm optimistic for that path, historically speaking, it doesn't usually help. And you always end up with this third option, which is to monetize the debt or to print money or to devalue currency to deal with this problem. And all roads lead to this globally, not just in America, anywhere you want to look right now. So this is a long-winded a response here to say that one, don't panic. First and foremost, I can't stress that enough. This moment that we are in right now, a lot of people feel uncertain about it and what to do and how to approach this investing wise. But this has actually happened historically, and there's solutions to it. And they're ones that we're implementing here at Point 32 Investment Partners. So if what I discussed today is a concern to you, please give us a call. This is what we do. This is how we help, and this is how we work through people. We work through markets. We work through challenging options to make sure your portfolio has made sense and set up for the long run so you can retire on time with enough money. That's all I got today, guys. Any questions, comments, please let me know.